Welcome to my midweek stock market update. For those who don't know me, my name is Phil Grandy, CEO of philsgang.com. Also, I was named Entrepreneur of the Year in the United States. I also made the Inc. 500 list, where I brought two private companies to the 500 Inc. list of the fastest growing companies in the United States. I also was in Donald Trump's first book. Now, with that all behind us, what in the hell is going on with the market? The big question this week is, what do I do with my gold? Look what's going on. Interest rates are back up. Inflation's back up. Well, here's the answer. First of all, we all know that gold does well when the dollar's going down. Now, everyone's saying how weak the dollar is, but really, is it? Look, since January, yes, the dollar's gone down, but the dollar is in a upward trend since 2014. Higher lows, higher highs. Look at the trend. Now, the answer to gold is this. If the dollar continues to tank, then gold will continue to rally. But if it reflects these rallies back here and starts to rally again, then your gold is going to go down and you're going to have to start shorting. Now, let's take a look at what's going on. If you take a look at the yield, the most important yield, this is the 10-year Treasury yield. When people are buying bonds, they're seeing yields going up instead of down. That's not very good. And this is really scaring a lot of traders. But there's nothing to be scared about as long as you continue to follow the money, the pricing, not the noise. So let's take a look at what's going on, okay? So first of all, if we look at the indices, okay, and we go back to, again, our spiders have been doing pretty well, very strong, okay? But we're starting to see a little selling coming in here because of the interest rates, but we haven't seen a trend that's been broken, not yet. And we're starting to see our momentum continuing to go up very nicely. That hasn't changed. We haven't seen any crossovers yet. Now, the most important one, the small mid-cap stocks, why is that so important? Because IWM is the strength, the heart, the everything of the stock market, right? Those are your small and mid-cap businesses. They have to do well for the economy to do well. Now, just recently, they started to rally, but now we're starting to see a pullback. And if you look at, again, go back to the spiders, you see where the spiders are up here, right? At the top, watch this. When you got your spiders really at the top. Now, if I drop back and I go back to my IWM, okay, you can see that IWM has not caught up to that, to the spiders. So IWM is going to be very important. If IWM starts breaking these lows right here, that's not going to be good for the market. If it continues to make new highs, it will be good for your stocks in the market, as long as it stays above the 200-day moving average. Now, the banks have reported, and it's a mixed bag. And even though we've done very well with our banks on a breakout, you can start to see some selling coming to the banks. If they start breaking through that 50-day moving average, then you got a problem. As long as they stay above both moving averages and make new highs, then they'll keep going higher. Now, what does this all mean? Well, if you go look at transports, they're pulling back a bit, but they're still above their moving average. The energy stocks, okay, they started to rally, but they're now pulling back. I don't want to be involved with the energy stocks. And if I look at the builders, no thank you, and especially with rates going up. And if I look at retail, are you kidding me? The retail is so weak, but nobody has seen it yet because they keep reporting the retail numbers based on the inflation price, whether the gross sales. They never tell you the units. That's what you want to know. So while the units are declining, prices keep going up. So 1 month, it shows retail's up $1 million. The next month, it's up $1.5 million. But what they don't show you is at the same time, what they're selling, the units is going down. So, again, what we've been doing is staying with our strongest stocks, and that's the tech stocks until they don't work anymore, okay? And we've been trading and doing beautifully. By the way, we've been doing really well outside of our tech stocks. You can see where money has gone from coming out to going in to our beautiful, I mean, this is aerospace and defense. A lot of money is going in. Our government is plowing money into this stock right here, or into this group. So we have a very strong stock here. If the market starts to tank and this stock holds, that means it's got relative strength, I'd be staying with these kind of stocks. Now, the MAGs, NVIDIA, these have all been the big winners. So we just have to wait and see. If IWM starts dropping, and these still hold, and the S&P drops, and these still hold, then that means that they're going to keep on pouring money into the same stocks that have been driving this whole market up. The scary part about the market is only 10 stocks participated in the all-time new high on the spiders. 10. And what's even worse is the breadth of the market is scary because there's only 22 stocks that have all-time new highs in the S&P 500. Normally, when you have a big breakout, you have 75, 85, 95 stocks all sharing that all-time new high. We got 22. That's very negative. But again, we follow the money. As long as money keeps going into, okay, and again, this is important, the money supply, and that's how they've been getting away with it right here. They keep pushing these stocks up by pushing that money supply like they've been doing since 2008. They don't care about the earnings. They don't care about anything. They just keep shoving money in. And what happens? Everybody runs and they all buy the same stocks. Even though interest rates are going up, they all go back to the same stocks. Here they go. They're MAGs and they're NVIDIA. So we just keep following the momentum, even though we know that there's a problem, okay, with the market internally. So all your tech stocks, all the breakout stocks, okay, like AMD and XLI, again, it's all about, when the market starts to correct, will they have relative strength? And they're the leaders. So your semis are the leaders, your tech stocks are the leaders, okay, and your communication stocks are all leading this market and has been. Look at the communication stocks. Okay, your Meta and Roku and Verizon. So those are your winners. Those are the ones I stay with. If they start tanking, I would learn how to sell short. And we can help you with that. Go to philsgang.com. So I hope this helps you. Always put the money where it's going. Follow the price. Follow the money. Close your ears to the BS. Okay, it doesn't help you. If you follow the money, you'll always be more right than wrong. So that's it. Until next week, same time, same place, where I'm going to try to help you with the stock market. Join my gang, philsgang.com.